European Union leaders have agreed on a €90 billion loan to support Ukraine, but have failed to reach consensus on using frozen Russian assets for Kyiv. Now, Belgium's concerns over legal risks stalled the plan. The EU agreement, which came after more than a day of talks at a summit in Brussels, offers Kyiv a desperately needed lifeline as US President Donald Trump pushes for a quick deal to end Russia's war. The EU estimates Ukraine needs an extra $135 billion, that's equivalent to almost $160 billion, to stay afloat over the next 2 years, with the cash crunch set to start in April. While Kyiv may be left disappointed that the EU did not take the leap to use the Russian assets, securing financing another way still may be a relief for the war-torn country. Meanwhile, Ukraine's President Volodymyr Zelenskyy has warned that Kyiv may have to sharply cut drone production if funding from loans backed by Russian assets does not arrive by spring. Listen in.
If this tranche does not arrive, Ukraine's drone production will be reduced significantly. For comparison, if today we, in terms of cheap drones that we use on the battlefield, have an approximately competitive number of such drones with Russia, then it will be much lower.
The European Central Bank has kept interest rates unchanged at 2%, taking a more optimistic view of the Eurozone economy despite global trade pressures. The central bank raised several of its growth and inflation projections for the bloc. Take a look.
The European Central Bank kept its policy rates steady at 2% on Thursday. It took a more positive view on a Eurozone economy that has stood up well to global trade shocks. The central bank raised several of its growth and inflation projections for the bloc. The more positive outlook could make further rate cuts in the near term less likely. Recent growth figures for the Eurozone have beaten ECB expectations. It's due to exporters dealing with US tariffs more effectively than thought, and because domestic spending has balanced weak manufacturing. Inflation has stayed around the ECB's 2% target and is expected to stay there looking ahead. The more upbeat data has already led investors to believe the ECB's easing cycle is near complete. The bank had previously halved its policy rate from 4% to 2% in the year to last June. But the ECB formally kept its options open on Thursday. It repeated it would set borrowing costs meeting by meeting depending on incoming data. ECB President Christine Lagarde.
There was a unanimous decision that was taken today concerning the rates that we decided to hold. But there was also a unanimous view that all optionalities should remain on the table.
Another big announcement came from Britain's central bank on Thursday. The Bank of England cut interest rates after a close vote by policymakers. They agreed to lower the rate for the fourth time this year from 4 to 3.75%. The decision comes after a big inflation drop in data this week and a new forecast the economy is stagnating.